Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers were active at the 76 quarter to 78 quarter support, and overall the buyers have been a bit more dominant as the market continues to balance within a range. Heading into the open, we are going to establish a neutral bias here and be open to a move in either direction. In the event of a move below initial support, responsive buyers can still be active at the 69.5 to 71.5 bull bear zone, and as long as that zone's holding, technically we would still be balancing within a range, and we would essentially still be balancing within the current week's range. So that's still a key area, and from there we can still get a move back up towards the 76 quarter, 78 quarter, and possibly beyond. On the upside, heading into the open, we have resistance at 84 to 86, and a breakout above that zone would bring the 92.5 to 95 zone into play. Beyond that, the risk reward does become questionable for the buyers, especially considering that the major catalyst this week is the UK referendum on whether they're going to be staying or leaving the European Union. So ahead of that, it's very unlikely that the market is going to sustain a big trend one way or the other, but more so to the upside. So it's just unlikely that there's going to be a, risk on environment all the way up at 97 quarter, 99 quarter ahead of the referendum. So the expectation is for the markets to continue to balance within a range, but if we break out above 84, 86, then we could test 92.5 to 95 and possibly even 97 quarter, 99 quarter, but at that point in time, we can expect responsive sellers to be active in the market. And the higher up you go, the better the reward to risk becomes for the sell side, and the more risky things become for the buyers. On the downside, a breakdown below 69.5 to 71.5 would signal sellers in control, and from there we can get a test of 61 to 63 and potentially a little bit lower, but we would be exhausting the range, so responsive buyers can be active at 61 to 63, and then we can simply start balancing again. So the idea is that the market does have potential to expand the current week's range, but it's unlikely that it's going to really trend one way or the other. So even if you head higher, you might expand the range to the upside, perhaps into the 92.5, 95, maybe 97 quarter, 99 quarter. But at that point, the market is likely to start balancing again. On the downside, because it could result in liquidation, you can get a little more range expansion on the downside as compared to the upside. So in the event of a breakdown below 69.5 to 71.5, you might expand the range into 61, 63, maybe fill the gap at 59, and then start balancing yet again. Now, in order to break down below the bull bear zone or really sustain a breakout above initial resistance and especially above 92.5 to 95, we are going to have to see some pretty sustained momentum in that direction and either broad market strength in the event of an upside move or some real weakness in the event of a downside move. So that means that if the market heads lower into the bull bear zone and we're not seeing a whole lot of momentum on the NYC tick, or we're not seeing any major weakness in the other markets and on the advanced decline, then we could just continue balancing within a range. So today's a day where we do need to pay a little more attention to what's happening in real time. We have to be more aware and mindful of the market internals and the real-time price action, because our bias heading into the day is very neutral. We're open to a move in either direction, so we have to lean a little more on how the price action is playing out in real time, how the day is really establishing and developing in real time. So those are the main thoughts heading into the open. On the econ front, we do have the existing home sales number at 9 a.m. Central Time. We have Yellen on deck at 9 a.m. as well, and then the oil number at 9:30. So we do have a few, economic releases this morning that can result in some short-term volatility. So those are our main ideas heading into the open. Let's see if the buyers can continue to be dominant here, and we'll take it from there.